guys, welcome to your final mock test for part 3 syllabus, and we are doing Latour. We will be covering evaluation of misstatements, going concern, and audit opinion. Okay guys, reading time 12 minutes. You should have been able to get through this scenario in 12 minutes. So if you did not, you need to practice getting through information quicker, whether it be reading faster or making quicker notes or making less notes in order for you to get through the information. Okay, background information. You are a partner at CA Auditors Inc., herein referred to CAA, a firm of registered auditors. So now you know what your duty is for the firm. CAA is a medium-sized audit firm with branches in all the major cities of South Africa. Expect medium-sized clients, and we can take on clients that are decentralized because we have got branches around. You are the designated auditor of the Latour Limited Group, herein referred to as Latour, for the year ended 30 April. So you're the designated auditor, so now you can see you are the partner. That is your experience for this group. I'm going to write your risk at the financial statement level because they are a group, so you've got all those risks that come with the fact that they are consolidated. And the year end is 30 April, so I need to make sure I'm aware of this. Latour manufactures and sells professional road bicycles that have been made to specification. So I'm just going to make a note here, because they manufacture, we've got an assertion level risk for the valuation of your inventory, because if you manufacture, the costing is a little bit more difficult than if you purchase a finished good. And they are bikes that are made to specification, so you could have a concern here with regards to your inventory. Again, valuation. If you're unable to sell an item that has been specifically made for someone who now won't take it. Okay. Latour is the largest manufacturer of professional steel road bicycles in South Africa. So the largest, so we get an idea of their size. They are large, we are medium. So there could be a discrepancy here in our ability, capacity to take on this client. But also, being the largest manufacturer, we expect that they are doing well. So we think that they can pay the audit fee when we're looking at their going concern ability. Latour has been in operation since 1977, so once again, they have been in existence for long. They are established. After cyclists in Cape Town staged a mass revolt known as the Big Ride-In. The goal of the Big Ride-In was to demonstrate how many cyclists used the Cape Town roads in order to justify the need for safe bike paths. Although the goal of safe bike paths was not immediately achieved, the Cape Town Cycle Tour was born, and together with this, the need for professional bicycles. So just explaining how they came about. Latour has been your audit client for the past 2 years. So they are not new, which means we audited the prior year, so we've got a bit of experience with them. 2 years is fine in terms of a long relationship. From past experience, Latour is faced with the following challenges when executing their daily tasks. The pressure related to management's incentive scheme to meet revised revenue and profit targets. So we've got pressure here, which could result in assertion level risk with regards to your occurrence of revenue if they create fictitious revenue because there is incentive. And profit targets, so financial statement level risk here because of these incentives and pressures to meet targets. The weakened market conditions as a result of the COVID-19 pandemic, weakened market conditions potentially going concern issues, and complex basis of accounting for the consolidation of financial information. So once again here, financial statement level risk, but this is now your group risk because of the consolidation. You are in the process of finalizing the 2022 audit. was evident from the financial results for the year ended 30 April 2022 that Latour is experiencing financial difficulties. So once again, another indicator that the going concern is an issue. Management has performed an assessment of Latour's ability to continue as a going concern. This assessment included income and cash flow forecasts for the period 1 May 2022 to 31 October 2022. So I'm very glad they've done this assessment, but you have got a concern because it's not for 12 months. It should be from 1 May to 30 April. Okay, so a bit of a concern here. On 24 May 2022, so I'm going to make here post-reporting dates. This is after year end. Media reports noted that Latour had entered into business rescue proceedings. So, here, once again, a concern about their ability to continue. They've entered into business rescue. Should they be preparing their financials on a going concern basis? What happens if it's not viable? Is there a material uncertainty here? Because of this. The consolidated annual financial statements for the year ended 30 April 2022 have been prepared on the going concern basis, and management have not reflected these events in the annual financial statements. So, they've entered into business rescue post-reporting dates. However, this is an indication of their going concern. So, material uncertainty, is the going concern even applicable? They have not disclosed this. So there is a material misstatement in the financials because they haven't disclosed something that, even though it's post-reporting date, because it affects the going concern, it should be adjusted. Management have refused to grant the auditors with access to information pertaining to the business rescue plan and proceedings, as this is considered sensitive and confidential information. So if they are not giving us, is there a limitation of scope? We got to consider, can we get the information we need to make conclusions or assumptions from other means? The following information can be found below: draft consolidated statement of financial position, extract of the findings from the audit work performed. So my draft consolidated financial position, I've got the full current year and the prior year. And guys, I would just do a few calculations here to get a good idea of what's happening in the business. So I would add up my current assets and compare them to my current liability to see if they are liquid. And I've got 7474, so yes, they are liquid. I can go and do that for the prior year just to get an understanding, and you'll see that they are. We can see that they are solvent because there is an equity element. So total assets exceed total liabilities. So from this, I can say that they are liquid and solvent, which is good from a going concern perspective, noting that there were a few concerns there. Audit work has been performed on the draft consolidated financial statements, and an extract of the findings from the audit work performed is documented below. So audit finding 1, non-current assets. Latour has adopted the cost model in accounting for property, plant and equipment. The amount reflected in the statement of financial position is the carrying amount at 30 April 2022. The results of substantive audit procedures performed on the carrying amount indicate that the carrying amount is accurate, complete and valid. So I'm happy there's no misstatements in the PPE. The recoverable amount at 30 April 2022 is 23,550,000. So I'll just go and do a comparison here. Why have they told me that? property, plant and equipment at carrying amount 24,870,000. So what they have not done is impaired. So it is overstated because they have not recorded at the lower of the recoverable amount and the carrying amount. Okay, so we've got a misstatement here. They have not recorded the impairment, and that is 1320. Audit finding 2, non-current liabilities. Non-current liabilities comprise of numerous loans from financial institutions. Mr. Speed, the CFO, explained that the financial challenges experienced by the Latour Group after COVID-19 resulted in the need to restructure some of its existing debt to ensure the group's long-term financial sustainability despite the effects of the pandemic. So they need to restructure their debt to be able to survive. So once again, concerns with regards to the going concern, however, they seem to be trying to mitigate these issues. So they look at having a plan here to assist them. He added that negotiations with ABBA Bank, a large commercial bank, were successful and that the bank agreed on 25 May 2022 to extend the repayment period of its loan for another 2 years. So here we've got post-reporting date, because it's after year end, but they have been successful in negotiating, so some good for their going concern woes. Mr. Speed reclassified the loan to non-current liabilities in the consolidated financial statements for the 2022 financial period because of this restructuring. So he's reclassified it to non-current. So the only thing I can think of is that he must have had it as current and now it's moved back to non-current because of this. So I have to just go and check that's the case. And if it is, then we've just got to go and see, is this actually an adjusting for that reclassification to be relevant? It's post-reporting, but were there indications that this may happen in order for them to go and process this as adjusting? The extension of this loan and reclassifying will improve the group's ability to meet its cash flow requirements for the 2022 period. So once again, if it's going to improve this, it would indicate that they've done a change from current to non-current. But is that correct? So the following details regarding the original and revised repayment terms of the loan were provided. At 30 April 2022, consolidated non-current liabilities included an amount of 2.5 million payable to ABBA Bank that was renegotiated as follows. So the amount advanced, original terms and revised terms, 2.5 million, so same. Capital repayment date, original term was end of year, and now it's been revised to 2024. So they have gone and done that. This CFO has done an adjustment from current to non-current. But this doesn't look like it's an adjusting event. It's a non-adjusting because there was no indication that this was going to be viable or this was on the cards. This was only done on the 25th of May. There were no conditions present at year end that this would happen. So it looks like is that this shouldn't have taken place and ultimately they should still have it as current. And what does that do to liquidity then? They're saying they needed this for cash flow. Repayment is still 100% of the loan and the revised terms have increased. So what it looks like here, guys, is we've got another misstatement. Changing from current to non-current when they shouldn't be doing that. ultimately affecting liquidity. What happens if the 2.5 million is in current? Go back here. Add 2.5 here. All of a sudden, we are no longer liquid. If we're no longer liquid, are we reckless trading? And I know we only do reckless trading later, but guys, it is something that you are expected to know at any point. And if we are reckless trading, is there a reportable irregularity? Once again, something we only do later, but you are expected to know at any point in the syllabus. Audit finding 3, going concern assessment. The following are the audit procedures that were performed with regards to going concern for the period 1 May 2022 to 31 October 2022, as it was covered by management in their assessment thereof. So because management only did their assessment to that point, that's what the auditors have done. However, we know that the auditors have to do it for 12 months. So it's not sufficient work on going concern at this point. Obtain management's assessment of Latour's ability to continue as a going concern for the period 1 May 2022 to 31 October 2022. Discuss the assessment with management, including their view on Latour's going concern status, as well as the process followed by management when they performed the assessment. And discussed and evaluated management plans for future actions with regards to their going concern assessment to determine whether they are likely to improve their financial position and whether it would be feasible in their circumstances. So we've done some work on their future plans, but only what's in the going concern assessment, nothing to do with the business rescue because we haven't been given the information. Okay, let's go have a look at the required.